then you can go back to the World Bank and actually use the TA to do project preparations and reduce the barriers to investment, because in the end, you want this fund to be financing, I think, private sector investments. How do you reduce the barriers? Well, if you can finance part of the cost of project preparations, it becomes very attractive for industry, hotels, etc., to start thinking about, even privately owned utility companies, to start thinking about, okay, maybe we should use these funds that are available. And then, as a final step, I think you need to look at how to leverage the donor funds and bilateral support to de-risk whatever instruments that you set up, assuming that there is going to be private investment in there, assuming that we are talking about maybe countries with not the highest credit ratings in some cases, or private sector counterparts who generally also there'll be credit risk. Look at how the donors can then bridge that gap, which is really what we're there for. It sounds very simple. I'm really not an expert on this, but the point I'm really trying to make is please use the expertise that is available already in the region. And I would, coming from a public sector perspective, please, I would also suggest use the expertise that's available in the private sector to design these products in a way which are efficient and financially sustainable. And thanks very much for having me.
Thanks very much. Daniel?
Thank you, Chair. Prime Minister, Deputy Prime Minister, Minister Jordan and Cattle, and distinguished colleagues. Chair Gregory began this session by saying that you do not refuse a request from the Prime Minister's office. And I am subject, I'm not going to say a victim, but subject to that, since it was just at lunchtime today when Prof approached me and said I would be on this panel. So here I am. So you'd bear with me. Chair, I want to speak a bit about a section. We've had, I think, quite robust discussions today. But I want to speak a bit about a section of the economy that we have not, I think, discussed as yet appropriately, which is oftentimes referred to as the engine of growth in our societies. I told them only do that if you weren't paying attention, actually. But anyway, and that is the micro, small, and medium enterprises, MSMEs. We've spoken a lot about householders. We've even spoken about the large regulatory requirements. But what happens to the MSMEs in the post-disaster period? And how do they cope with the rebuilding and rehabilitation process? Interestingly, Chair, in 2018, in a regional scoping study undertaken by the Caribbean Development Bank, very few businesses interviewed stated that they had any holistic business plans, business continuity plans as it relates to the low carbon economy or building climate resilience. And this is across our CARICOM states. So even as we start to speak about insurance for these entities and across the region, we exist in an environment where MSMEs, and we recognize that they represent somewhere north of 80% of the private entities in our countries, have no plan, even in good times, in non-disaster times, as to how their businesses will continue to thrive. So this is the first point I want us to perhaps start to wrap our minds around, and I'll come back to that in a little bit. The second point I want to bring to this distinguished gathering, the Prime Minister last night in her presentation at the Town Hall meeting noted that our region has produced grades across many various spheres. And this is, of course, spot on. One area in which I think we have produced greats is in the area of science. We in this region have produced absolutely fantastic scientists. And the Caribbean Development Bank has worked with the 5Cs, the Caribbean Community Climate Change Center based in Belize, the Caribbean Institute for Meteorology and Hydrology based right here in Barbados, and of course the UE Climate Science Group based out of Mona. And the persons in these various organizations are doing absolutely fantastic and groundbreaking work as it relates to our region. Now, the challenge I have with them personally, I don't know if any of them are here, but I've told this to David Farrell. If you ever meet these folks, they are the textbook nerds, right? They're happy to be creating stuff in their heads. And I remember once, I think it was with the passage of Hurricane Sandy, I'm not sure if you remember Sandy, every model, including the NHCC's model of the path Sandy was going to take, was incorrect. The only group that got the path right was CIMH. And David was telling me this boastfully, and he said, but you know, who knows this? Who knows this? And why wasn't it shared up front? Why don't we, this great work that these scientists within the region they're developing needs to be put out there such that the citizenry of this region can benefit from it. The other point I want to make, which Senator Maskell touched on earlier, is the social consciousness of our region. Notwithstanding the catastrophes which we have been subjected to over the past 2 years or so, social attitudes towards building resilience through mitigation and adaptation are still woefully poor, especially at the MSME level. And if we do anything from this gathering this week, we need to grapple with a way as to how we get the consciousness of our people, especially the small business owners, to appreciate the benefits of incorporating resilience into their operations. Now, I want to move on again, and I'll tie it all together at the end here. Another point the Prime Minister made last night was in the use of digital transformation. One of the projects we're doing right now with the UE Climate Science Group and the Met Services and Fire Services in Jamaica is grappling with the issues of bushfires in that country. And what we're doing now is, by looking at the number of days without moisture, by looking at the quantum of litter on the ground and other geophysical factors, we can actually predict what will happen in the area of bushfires with some degree of accuracy. Now, the benefit of this information to the small farmers operating within these spaces in Jamaica is significant. Now, utilizing the digital transformation process by pushing this information to the cell phones of farmers, small farmers in Jamaica, when this is rolled out in February of 2020, in a few months' time, we believe will be significant. But it can't just end there. So we need to consider the use of early warning systems in pushing information to our micro, small, and medium enterprises. And in closing, this is what I'd like to propose here. A wraparound resilience product. Now, what I mean by wraparound resilience product, a three-pronged product essentially, whereby our MSMEs first are provided with concessional resources. CDB stands ready to do this, and it's a conversation we've started having. And we'd like the other MDBs to come on board. But providing our MSMEs with grant resources to develop business continuity plans. This is the first thing. Now, how is this going to be incentivized? By developing a BCP as a small business, you are then not, I don't want to say entitled, but we essentially provide some form of certification once your BCP has been prepared. Moving from there, we will then provide concessional resources for you to build resilience into your operation, as in either through mitigation. And we talk a lot about mitigation. Mitigation is sexy, we get it. Changing lamps to LEDs, etc., the payback is obvious. What we need a lot more of in this region is adaptation. So investing in your business to make it more resilient, either through mitigation and adaptation, we can provide resources for this. And then on the back end, the third prong of this wraparound service is the insurance product. Because you as an MSME would have now demonstrated that not only have you invested the time to develop a BCP, a business continuity plan, and you've also built resilience into your operation through either mitigation or adaptation, but you know which makes you eligible for an insurance product. Now, the pricing of that insurance product is a conversation we can have with those gathered in the room. But these are the things I'd like to put on the table to be considered. I thank you, Chair.
Thanks very much for those presentations. Now, Gregory has a flight to take, but I want to first ask him, because I know the Prime Minister had assigned some homework for Ravi early in the day. And based on what you would have presented here this afternoon, how do you think, in terms of what was discussed, certainly during his presentation, how can you see that some of the aspects of what he had presented early in the day and what we spoke about in terms of matching those long-term assets with liabilities in the way that we can use regulation, in a sense, to mobilize the resources in the region. So I just wanted to put that to you as a first question and then open the floor.
Sure. Thank you, Minister. If you're insuring assets in a country that is vulnerable, it's in your interest to hedge that risk by investing in instruments that increase the resilience of those assets. So it creates a natural opportunity for insurance companies to do that. So certainly the fund that I suggested gives the opportunity for insurance companies, long-term investors. It's a 20-year instrument I'd proposed to do that. It also creates the opportunity for sovereign wealth funds to invest, especially those that are based heavily on returns from industries that increase climate events. This is their way of giving back to the most vulnerable states, because their economies are driven by sectors that pose a challenge for others. So the range of investors for the investment product would certainly range from insurance companies, definitely. And if you use some of the fund proceeds to invest in public-private partnerships where there are isolated revenues generated, if it's a port enhancement facility or a drainage facility where there's revenue generation, the private sector certainly could invest, and the public, in those types of instruments. So you could get both investors on the short end and the long end as well. So, yeah.
Any questions from the floor for Gregory before we move on to the rest of the panel? Sure. Or to anyone in the panel for that matter. Go ahead. You can come to the table.
I was trying to follow the sources and uses of funds in the 2 billion. So first, just dealing with the uses. Having gotten the fund, you would issue 20-year paper, roughly say 4.5%, whatever. And then you would do a credit and enhancement. So that would be another use of the proceeds, and then you'd set up a sinking fund. So in effect then, the all-in cost, the financing cost, would be of the order of around 8%, 9%? That I was first trying to understand the arithmetic because I couldn't follow it.
Because of how late it was, I went through it light speed, understandable. So, assuming the rating is B, to
that's where you started.
Get it up to A, you're going to have to do credit default swaps to improve the credit rating. For some long-term investors who want a A-rated paper for 20 years to bring it down to 4%. But the credit enhancement, that's where I suggested the multilaterals step in, because they can't provide insurance cover in the event of a natural disaster, one firm. But by all contributing to the annual CDS premium, so each of the multilaterals putting $5 to $10 million.
So that's how you're funding this CDS, because
and that's a way of contributing.
We tried doing that in Jamaica some years ago prior to the debt swap. And what we found was the market was highly liquid, first of all, where it existed after 1 year, and it was very expensive. So I was trying to work out who was going to provide that 20 years CDS. But okay, I understand you're looking for effectively a non-market institution to provide the CDS.
Well, we looked at a lot of the global investment banks, and they priced it around 350 basis points per annum as a cost of the credit enhancement, about $64 million US on $2 billion. So the idea would be divide that $64 million a year amongst all the multilaterals, and everybody gets to chip in, and that way provide an enhancement by improving the credit quality of the instrument and lowering the annual cost. So the coupon on the bonds lower is 4%. You know, as a matter of fact, the coupon on the bond could vary depending on the type of investor. If you have one of the global leaders coming in as an investor, you could probably get them to take it a lower rate. So the enhancement is less. So
okay, then I understand the arithmetic on the uses.
Correct.
But the $2 billion now, and this is a US dollar fund now, in the source. Outside of Jamaica, you don't really have. Well, I know there are about $3 billion US in the banking system in Trinidad, and Jamaica has US dollars. Those are the sources of funds?
Right. So what I suggested, by creating a fund for $2 billion, you can, with the intention of enhancing the credit quality to A-rated, means that you can go to qualified institutional investors globally. Because you now have a 20-year instrument with an A rating assigned to it for 20 years. And because of that, you can get sovereign wealth funds to come in. And actually the intention would be to try and encourage those states that generate significant revenue from fossil fuels, to use moral suasion to get them into come in as investors. And their sovereign funds are buying instruments at 3.5%. They're going to get a 4% instrument for 20 years.
You don't have to look far. Trinidad sovereign wealth fund earns less than 2 on that.
There you go.
Instrument.
Exactly.
So okay, I understand your sources and uses.
You got it. Okay. Excellent. Okay.
This is fully off the government's balance sheet, this fund.
Fully off the government's balance sheet. That's correct.
Now, Daniel raised some very interesting questions relating to the micro, small, and medium enterprise. Yeah, sorry.
Good afternoon, everybody. I got to run.
Thanks for coming. Thank you. Sorry, Daniel raised some interesting points about the small business sector, certainly in the economy. And I think that, in a sense, I realize both of you from CDB, and so there may be some level of collaboration. But I think to Dr. Ram's initial presentation, how do we, as bankers, insurers, government, multilaterals, how do we respond to the fact that in the region, as is quite clear, and I think Dr. Maskell raised the excellent point, 80% of our economies essentially are small, well, micro, small, and medium-sized enterprises. Much of the individual savings across the domestic savings across the system will be represented across that segment of the population. So what is it that is required of governments, certainly across CARICOM, to be able to facilitate solutions that will redound to the benefit not just of the individuals in terms of mobilizing their resources, but also to be able to build greater resilience within that sector? What is it that we need to do now?
Minister, that is truly a fantastic question. I mean, I think really it comes down to incentives, and quite targeted incentives. I'll tell you why I say this. We primarily interface with the private sector now at CDB through financial intermediation, through lines of credit. And we recently, well, not recently, a couple of years back, in one of our lines incorporated energy efficiency measures as to incentivize the line. And the uptake was very small. The uptake was quite small. So, you know, I think in terms of, it really comes down to changing attitudes and social awareness coupled with some measure of incentives. I think businesses small businesses in particular, need to see the impact on their bottom line for incorporating both mitigation and adaptation measures. And of course, juxtaposing this against appropriate insurance with risk transfer schemes. So I think as it relates, for instance, to the BCP idea that I threw out there for discussion, I think there's something that perhaps government could look at in terms of a policy directive for MSMEs, incorporating it into their overall strategy. I think if we are saying that over 80% of private entities in our various economies across the region are micro, small, and medium enterprises, then we are operating on a knife's edge if the vast majority of that number don't have a plan for how their businesses will continue. And so I think really we need some kind of policy directive on that to begin with. And then we can move from there to consider incentivizing incorporation of mitigation. And I want to stress, and let's not forget, adaptation measures.
So Flores then, assuming that we can develop a policy quickly in terms of the business continuity plans for our small businesses. You mentioned earlier that there is plenty of technical assistance for building resilience within the fund. So is that something that we can supersize as a region, given that the work is already started in a sense by the CDB? And if, as the Prime Minister says, as we are going through this process now of trying to move the needle as quickly as possible, is that something that we could work with the EIB and the other partners in order to start to build that resilience and utilize the technical assistance as required across the region?
Thanks for the question. I think it comes back to, again, what are you trying to achieve and what are the solutions you have in place? An organization like EIB, as I mentioned, we are unfortunately a little conservative, and so we'll be looking at public infrastructure and like the big adaptation projects in that sense. You take an IDB with all the expertise they have in the region, their local country offices, and CDB obviously as well, unparalleled expertise. They're probably coming up with more innovative financing solutions than we can. When you've done the policy work, I think each organization will have be able to provide support in a certain way, but I would like to reiterate my point that the real experts, as far as my organization is concerned, are sitting in the insurance companies and the banks, the local banks here that are dealing with these clients every day, that are dealing with the real losses every year, and have actual products available in other geographies that could be moved here. To actually go quickly, I understand the benefit of doing something regionally, but I would also start in Barbados, where you have full control over your policy and regulatory framework. There's a very clear political vision behind it, and when you have those products developed, it's going to be probably much easier to start expanding them to other regions as opposed to doing everything at once.
Gotcha. Go ahead.
Yeah, I was just going to make the point, Minister, also that we have started this conversation with the Green Climate Fund, and we are working to develop a proposal. Now, we know the length of time sometimes it takes to work through this, but we intend to stay the course and develop this with the GCF, because we see it as being important. And the good news is, to come back to the EAB, as Flores would have mentioned, we have a pretty long-standing collaboration going, and we heard quite a bit today that the concessional funds aren't necessarily available for certain countries within the region. And I just want to make a point here that all CDB projects undergo climate screening, climate vulnerability assessment. So we incorporate resilience into every capital project. And with that in mind, with the line of credit from the European Investment Bank, which offers a 50% interest rebate on our financing, it significantly reduces the cost of financing to our board member countries, as long as resilience has been appropriately incorporated into the capital project.
Any questions from the floor? Any observations as it relates to financial innovation and climate change? No? Okay.
I'll just make the point again that I think we need a regional solution ultimately. I think given the loss experience that we see in individual territories, from our insurance company perspective, I think to get the kind of premiums that we want, we need to have some kind of regional solution. And certainly, as was discussed today, the idea of a regional reinsurer is something that should be explored further, because that in turn will help us keep the premiums down and become more affordable.
Okay. Well, it has been an engaging discussion. I think
Ryan, Ryan, just before you wrap up, I just wondered if for the private insurers, I just wondered whether there is a recommendation, a proposal that we as the region can maybe explore that can help us to reduce that overall premium cost for the private sector. We talked a lot about the public sector, but I'm really concerned about the private sector, because again, it represents exposure to the government. And I just wondered, I don't know if we've heard enough from the reinsurers, the insurers, as to what it is that we as countries may be able to do to help mitigate or contain some of that cost. And I'm really interested in that, because that's where my exposure is.
Pooling of risk. And right now, by virtue of the fact of the small size of our region, a lot of the reinsurance tends to go outside of the Caribbean. I think until we can get to a point where we can have a reinsurer that has enough of a capital base that we can at least retain some percentage of the reinsurance in the region, then I think that's the only way we're going to be able to drive the premiums down. So it's not going to be solved by individual country. I think it requires a regional solution at CARICOM level to say, let us all come together, create some kind of regional reinsurance structure, and then the insurance companies in the region can then tap into that reinsurance structure.
In practical terms, from a policy perspective, I think if we have reinforcement of building codes, we'll go a long way in making insurance more affordable and also reduce the cost. When we saw the presentation from DCQS, there's a direct correlation between the additional costs to reinforce properties to make them more resilient. And certainly from the insurance industry, pricing is based on construction type. So you'll find that the more superior a building is constructed, the cheaper the insurance becomes. So that is a real life thing that you can actually do. If you want to do something immediate, that would certainly impact affordability and also allow others that currently don't or can't afford insurance to actually get the insurance they need at affordable pricing.
There are two factors that are required. Firstly, we have very little negotiating power with reinsurers because our purchasing spend tends to be either by individual private entity and or by country. So the ability to negotiate is constrained by that. So if we were to combine our purchasing power, find a mechanism to do so, it means now we have the ability to better ability to negotiate. The second part is if we were to have more capital, indigenous capital in industry, we would have more first dollar exposure of our own capital and again have the ability, right, to negotiate better because reinsurance pricing is not linear. Okay, it doesn't work like that at all. So it comes down to how our markets have evolved and they're structured. They're not structured in an economically feasible manner to allow us to do so. Now, there is one thing within our power, certainly, and this protection gap. So we can actually have more purchasing power if we were to mandate compulsory insurance, whether it be public through the public, whether it be public and laid off, or privately and laid off. And the second part is what I presented earlier this morning. But it can be done, but it requires now a coordinated, collaborative response. Prime Minister, we already locked into the next year's season because the companies are already towards the end of negotiations with the reinsurers for next year's season because we can't commit capacity to our various markets at the beginning of the year unless we have locked it down by the end of this year. So the region will lose $1 billion US of FX next year.
Thanks very much. Any other comments, queries? Swiss Re, you want to respond?
Well, look, I'm hesitant to get caught up in a fight between insurers and reinsurers at the expense of everyone who's listening here, but I think generally speaking, what my colleague Ruben before was trying to say is that generally insurance markets go through a cyclical pricing or pricing cycle. And overall, in the Caribbean, as in many other parts of the world, our view is rather that what happens after a severe event, rates go up, and you have multiple subsequent years of non-events, and they drop below what we consider to be sustainable rates until they then perhaps spike up a little bit again for a limited time after very severe events. But overall, I think the notion somehow that it is the reinsurers which impose unsustainable insurance rates in the property and casualty business on regional insurers, there is really no basis for that claim. As a matter of fact, I would argue that it is the global distribution and sharing of pooling of risk that is the essential function of the reinsurance industry that makes it affordable in many places.
There's also an additional component that we didn't mention, but due to the low interest rates across the globe, capital markets are investing a lot on cat bonds. Cat bonds being another way of doing risk transfer solutions. So with capital markets, which is
much bigger than the reinsurance market, investing on this type of solutions is also helped putting the prices down. And as Tobias mentioned, when there's prices down below sustainable pricing, when there's events across the globe, everyone realized that prices were way below, and then that's why you see a peak of prices going up.
Well, if there are no other comments, I'm just going to ask each panelist just to wrap up 30 seconds very quickly in terms of solutions going forward.
Sure. I would say my message is that, as we would discuss today, I think the way forward will require further collaboration. As I said, I think the insurance industry is committed to working with governments and the AFIs in terms of developing appropriate solutions. I think my overall message would be progress, not perfection. Let's try to make some small steps, and so that a year from now we can see some level of progress.
Thanks. I would just like to reiterate my point about the division of labor, whereby the international organizations can provide support to the government and technical assistance so that the governments can figure out what they want to achieve, and then form a coalition with the private sector in a true partnership so the private sector can come up with the solutions to meet those problems. Thanks very much.
Yeah, I just want to close by saying the climate science works. We've seen it over and over again, and it is our duty to change social attitudes for our small businesses and our citizenry to incorporate it into every aspect of our lives.
Thanks very much. I certainly want to agree 100% with you. We have taken those presentations at Cabinet, as the Prime Minister has indicated, and we've seen evidence of what is required in terms of research and development, and certainly the investment in that space to close perhaps some of the information gaps that may exist at the moment. And I think that as we go forward as government, and as we continue to engage certainly with the stakeholders, our intent is to be able to build on the platform that has already been developed in a much more cohesive way, and to the point where the information is relevant certainly to the citizen, the small business owner, such that we can see greater uptake with respect to, or at least in terms of the attitude as relates to resilience and what is required in our daily lives to build that resilience, because it will mean different things for different people across the region, and certainly in Barbados. And I think we do have enough information to put a strong case, I think, not just to the region and to the citizens of the region as to why we need to democratize, in a sense, the financial system, mobilize our resources to come to our own rescue in the first instance, but is how do we unlock those resources such that people understand, as Dr. Maskell said, is that self-interest first, but there's a benefit down the road which will redound to the rest of the communities and certainly the countries and the rest of the region. I really want to thank you guys for an engaging discussion, and I really want to thank all of you for attending this event, because this is to continue the conversation. We have set some homework, as the Prime Minister has said, and there's much more left to be done, and we will do our part as government to create the appropriate policy framework that will see not just at Barbados but the rest of the region start to build the resilience that we know that we can, whilst working with all of our international partners in order to help achieve that. So I really want to thank you all for coming today. I'm going to just turn it over to Avi for his final comments. Thank you very much.
Thank you very much. Thank you very much, Minister Strong. It's been a long day, so I want to thank you all for joining us in this journey and being here with us. But wow, it's been an amazing day too. I think it's been very intense, very focused. We've talked a lot about a range of subjects. But I see a pathway emerging from today. I think that we've identified our key problems. We have a lot of uninsured, underinsured people in the Caribbean. We are faced with a climate risk that is a total risk, a comprehensive risk, a risk that can be over 100% of GDP. And these risks are rising. They're high and they're rising, and they're increasingly correlated. And on top of all of that, our sovereigns are improving their fiscal position, but there's limited fiscal space, limited and stretched balance sheets to take on board what is required to be done. I think the emerging solution is a two-track process. It's about relief and about resilience. It's about using insurance mechanisms to provide liquidity when we need it most after the disaster. And there are a range of instruments we've talked about that deliver that. We talked about the hurricane bonds. We need to expand this instrument to all of our debt instruments, all of the public sector debt instruments, and also make it the convention and the norm, maybe the regulatory requirement of private sector instruments too. I love the idea that these are macroprudential tools. The regulator can require private issuers to have a macroprudential element to their instruments. CRIF, it's far better to have a small, successful entity than a large, failing one. But it's too small. We need to scale it up. We need to scale it up fivefold. And so the ambition that we need to set today is, how do we do that? How do we subsidize our premiums? How do we inject more capital to allow CRIF to be dispersing not 120 million odd, but 700 million odd? We need to scale it up. The contingent credit facility. I'm reminded of von Clausewitz, whose famous saying that no plan survives engagement with the enemy. So as this is rolled out, we're going to see more refinement, and we welcome that for an instrument that will become more flexible and more tuned to our needs. We need to think about resilience and insurance beyond money. I think it was CARICOM SG who talked about governance insurance. A whole range of things CARICOM and the region can deliver in an emergency that doesn't require cash. Whether it's the regional security service, regional court service, regional arrangements on health and hospitals and prisons and police forces. It's not just about cash payouts. And we need to think about capacity. When the disaster strikes, we need capacity on construction, capacity on consultants, capacity on a range of things. We need to do that before the disaster hits. Tenders, contingent contracts for what happens afterwards. That's about relief. But we also need to build resilience. And for that, traditional insurance is going to have a tough time. We need to do risk reduction rather than risk transfer in an environment where risks are just getting bigger and bigger. And so how do we do risk transfer? How do we do risk reduction? We've heard today of a couple different types of resilience bonds, and there are more. We don't need to choose one type. We could be creating, ladies and gentlemen, a new asset class of resilience bonds, of which there may be multiple types. And I think we will try them out and see which ones are working. But we need to scale that up. We need to have, over the course of the next 12, 24 months, $5 billion of resilience bonds issued in this region, if we really want to make an impact on this region's ability to withstand the kind of disasters that are hitting us. So we need to do a number of things, but we don't need to reinvent much. It's here. Ideas are here. Instruments are here. We just need to scale it up, and we need to do it. We talked at the beginning about John F. Kennedy's quest of going to the moon before the end of the decade. We no longer go to the moon. We need to be much more ambitious in what we're striving to do. We need to take what we need to do, and we need to do it. And we want to maintain this dialogue with you, but we need to set ourselves some targets, some time frames, some task forces that would deliver on this pathway that's emerging, a pathway of relief and resilience. Thank you very much indeed for being here. Thanks a lot. And good night.